Welcome back to part 6 of our video series dealing with nonprofit organization and our example question, Mambo. And in our previous video, we started our step 5 where we were calculating if we made profits or losses on other activities that the business would have engaged in, like the dance that they put on, and they sold some tickets and they had some dance expenses, and we recognize that based on the revenue that came in from selling the tickets versus the expenses that they had for that activity, they end up with a loss on that activity of $2,100. We also recognize that they would have also sold a vehicle, and the value of the vehicle at the time it was sold was $5,000, and they sold it for $5,500. And we recognize that they made a gain or a profit on selling that vehicle of $500. So now we are going to be looking at depreciation for our vehicles and also for our bar equipment. And we said that we started with bar equipment. They started with $25,000 worth of equipment and ended with $24,430. But during the year, they bought some equipment at value at $2,000 for the cost of $2,000. So if they started with $25,000 and they bought some for $2,000, then we will add that to the $25,000, and then we will subtract what they had at the end to find out our depreciation. So let's look at that. They started with $25,000. They purchased equipment, $2,000, and then they ended with the bar equipment at the end was $24,430. So let's come and see what the depreciation would be. 25,000 plus 2,000 minus $24,430. I think I did something incorrect. I didn't subtract. Right. So let's go over that again. 25,000 plus 2,000 minus 24,430. That gives us depreciation for our bar equipment of $2,570. So this is the depreciation for the bar equipment. And because it is bar equipment, when we are doing our bar trading account, this depreciation will go into that particular account, the bar trading profit and loss account. That's where this depreciation will go because it's associated with the bar. So let's look at depreciation now for the motor vehicle. So we're going to look at our motor vehicle, and we are going to look at the opening balance for our motor vehicle. So the motor vehicle started with $40,000. The motor vehicle was $40,000 at the beginning. They ended with $31,000, but they sold a motor vehicle for $5,000. So what we're going to do is that we're going to look at what they started with, and we're going to subtract the one that they sold for $5,000, that value $5,000, and then we will subtract what the motor vehicle's value at the end to come up with our depreciation for our motor vehicles. So we start with what the motor vehicles at the beginning. That was $40,000, and we are going to subtract. So that would be less motor vehicle sold, which is $5,000. It value was 5,000. You're not subtracting what you sold it for. You're subtracting what it was worth at the time. And then we are going to subtract our motor vehicles at the end. So that would be motor vehicle carried on. Okay, so this is an interesting way to calculate our depreciation. That is $31,000. So what our depreciation will be for a motor vehicle? $40,000 minus 5,000 minus 31,000, and that gives us $4,000 is the depreciation for our motor vehicles. So our depreciation for our motor vehicles is $4,000, and that will go into our income and expenditure account. That $4,000 will go into our income and expenditure account as depreciation for our motor vehicles, whereas the depreciation for our bar equipment will go into our bar trading profit and loss. So now we are at step 5. So we are now at our final step, step 6, where we can now do what they required us to do. So you see, we had to go through so many calculations before we can get here to do our bar trading and profit and loss account that they asked us for, our income and expenditure account that they required, and our statement of financial position. So what I would have done was that I did all of my working first, so then I can just simply go on and do my account. So we have the bar trading account already partially set up. So this is our step 6. So we start with the name of the association or the organization, Mambo Bar Trading Profit and Loss Account for the year ended 31st of December 2014. Our bar trading account is going to start with our bar sales, so our bar takings that they give us in the question, which is our bar sales. And that is in my receipts and payment account, so I can easily go back here and pick it up. My bar sales $98,200. So that is $98,200. And then there's less my cost of goods sold or cost of sales. How do I get that figure? I take my opening inventory or my opening bar stock or bar supply. So my opening bar, you can take my opening bar supplies that they would have given us in the question here. Bar supplies are $7,150. So that is also known as bar as inventory. So opening bar supplies, and that is $7,150. To that we are going to add our bar purchases. And how do we come up with our bar purchases? We calculated our bar purchases here, and that was $75,112. So $75,112. And then we are going to subtract our returns outwards that we came up with as that we were given in the question. And we can look here in our bar purchase account, $402. So we subtract our returns, $402. Just do everything one time. And instead of doing that, insert an additional row. So this will give me, so that is $7,150 plus $75,112 minus $402. That gives me the supplies available for sale of $81,860. And from that, we are going to subtract our closing bar supplies. All right, we're going to subtract our closing bar supplies. And from the question, our closing bar supplies was $3,300. Closing bar supplies. So we're going to subtract $3,300. Yeah. And that will give us our cost of goods sold. And our cost of goods sold $78,560 that we would have worked out here, $78,560. That will be my cost of goods sold or cost of sales. And then you're going to subtract the cost of sales from your sales. So $98,200 minus $78,560 gives us the gross profit we would have worked out previously of $19,640. So this is our gross profit. And we stated before that if you have additional revenue, you need to add that additional revenue to your gross profit. And in this question, we had some discounts received. So this is additional revenue of $800, and that must be added as well to our gross profit to give us a gross income. So we're going to add that as well. So we're adding our additional revenue. So add other revenue, and that would have been the discounts received. And discounts received were $800. And when we add that $800 there, so $19,640 plus $800 give us $20,440. And then we're going to say less our expenses. And these are our bar expenses, only things associated with the bar. So if we have barman wages, you will subtract it here. And we have our depreciation. We don't have barman wages, but we have bar equipment depreciation. So you have depreciation for your bar equipment. And that depreciation, we calculated that just now, that was $2,570. So $2,570. So then we subtract our expenses from our revenue, $40,440 minus $2,570, and we have a bar profit of $17,870. So this will be transferred to the income and expenditure account. You don't have to write transfer to income and expenditure account. You don't have to do that. You don't have to write that, but I'm just letting you know that this is where this bar profit will be going to your income and expenditure account. So we have completed our bar trading profit and loss account for Mambo using all the available information to us. So in our next video, what we'll be looking at is preparing the income and expenditure account. And we will be then also including all the information available to us for the income and expenditure account as well. So I would like you to like the video and subscribe to my channel as we continue with these various accounting courses.